Hey everyone, welcome to another episode of Live at Conferences because there's no consistent podcast on this channel. And we are here with the original morning crew of Leah and Jimmy, and we are also joined by Adam Back. And you guys just gave a couple of presentations on Liquid, and probably a good time to talk about it now. What's going on? What's the latest? I really enjoyed those presentations because I know where it's going, and Jimmy was like reminiscing of the color coins days, and my question to Adam Back was like as we're sitting there and we're both in the stands, and I'm like, okay, so obviously this will destroy Ethereum. What does it mean for Rootstock?
Well, I mean, Rootstock is bringing Ethereum functionality to Bitcoin, and Liquid is extended Bitcoin functionality. So it intentionally doesn't have Turing completeness because we don't think that's a good direction. So we have a different smart contracting system called Simplicity, which is based on formally verifiable logic languages, and it's a low-level bit machine. So we're working on adding Simplicity to Liquid as a direction, but Liquid itself is it has no native token. It's Bitcoin. You pay the fees in Bitcoin. You can transfer Bitcoin in and out of it. And it's a sidechain to Bitcoin. It's very easy for exchanges and people to program against because it just looks like Bitcoin RPC with a couple of extensions. And the assets in it are simple assets. They're just tokens that you can transfer around. And so you can make an asset with a multi-sig issuance. A lot of it is encrypted and using confidential transactions, range proofs, ejection proofs, and all kinds of fancy crypto. So basically, if you transfer a coin, the number of coins you transferred is not visible. If you do a trade, the price and the number is not visible. And if you do a few transactions, somebody looking at a block explorer from the outside can't even tell what types they are. They can't tell if that's like a Tether liquid coin, or a Bitcoin, or a gold coin, or some company's stock, or profit share, revenue share token for an exchange, or something like that. So it's generally like effectively permissionless in the sense that there is a federation. The federation is operated by participating exchanges, but a lot of the information is encrypted. So you have kind of cryptographic fungibility. So if one of the exchanges would say, we personally don't like this token that was issued on it, the first challenge is to even like find the tokens, because the only people that know which tokens are which are the people who own them. Like either I own one or I transfer it to Tone and now he knows what it is, but nobody on the outside knows what it is, basically. So you get kind of different fungibility guarantee, less from decentralization. So it's not as decentralized as Bitcoin, but from cryptographic fungibility. So it's a different hybrid. Like some of the very early eCash systems had very robust cryptographic privacy, but they were completely centralized. There was one server. So this is more survivable than that because it's like a federation. As long as 2/3 of the exchanges are online and signing transactions, it will keep progressing. So if one exchange goes rogue or gets hacked in a big way, it doesn't really have any power to like stop transactions or take money out of it. And the actual assets in it are native to it, so they can't be taken out of the chain anyway. The only asset that can migrate between the chain and the main chain is Bitcoin itself.
Yeah, so just to summarize, and this is how I understood it, you have the ability to, well, first of all, you take out decentralization and replace it with a federated system. But in exchange for that, what you get are really strong fungibility and privacy guarantees that are in the system, which means that you actually benefit because it's really, really hard to censor. You either have to censor the whole thing or nothing at all because there's so much confidentiality within each transaction. And that's a different model than the one that Bitcoin has, which is based on its decentralization, and everyone knows exactly what you're doing. You're transferring from one to another. And instead of doing that, you just have this very, very strong privacy component in Liquid. So I think this is a direction that makes sense. Because if you want fungibility, this is the way to get it. From what we talked about before, you have perfectly binding properties within Liquid, so you know that it's limited at a certain amount and some stuff like that.
I mean, actually, the amount of encryption gets kind of mind blowing. So you can, even when you're issuing an asset, there you can put a limit. Like, so you can make a one-shot issuance where you say like, okay, we're issuing 21 million of this coin, and that's the limit, and you can enforce that. You can also choose to encrypt the limit, so only people who are involved in the coin know what the limit is, and everybody else can see and verify that. Well, we don't know what the encrypted limit is, but the network is enforcing it. Saying you can have kind of quite private, closed asset management. So, you know, there's a block explorer, people can look at it, but it's basically chock full of encrypted values.
Yeah, that and the other thing that was really interesting to me was the ability to do atomic swaps with these multiple assets. And we were talking about this earlier, but this was sort of the original vision of like the Color Coins project, which we were both involved in. Actually, I was reminding Adam that that's how we first email corresponded with each other back in 2013, was about the Color Coins project. But yeah, this seems like a kind of a real killer app, like literally killing other coins. Like they don't really have a reason for existence if you have, you know, these strong privacy fungibility guarantees within, you know, like you can't even tell one transaction from another. You have like cross asset and cross amount, and you got cross chain. It doesn't have to be cross chain. It's a single chain atomic swap. I mean, it seems really kind of, I'm kind of astounded that this hasn't been, like, maybe because there's no token, you know, associated with it or something.
We get a lot of people contacting us saying, where can I buy the token? And we say, well, it's really simple, just buy Bitcoin. There is no token. And it's like a Bitcoin-centric system that's kind of an extension of Bitcoin. It's a sidechain of Bitcoin, and all the fees and the native asset.
And 1 minute blocks, from what I understand.
Yeah, right. So I mean, it's basically optimized for exchange traders and op traders and market makers and prop traders and people who want to, like, you know, move lots of money between BitMEX and Bitfinex and other exchanges quickly, and
not just Bitcoin, but also like Tether or something else.
Right.
Yeah.
So any assets. So I mean, it's a unifying approach to moving assets rapidly between exchanges. So if you were to provide, so if you were to provide a wrapper around something, let's say around Ethereum or Tron or one of these coins, so that there's a group of people who are providing a kind of escrow, multi-sig escrow service with a threshold for one of these coins, that can be traded across any liquid exchange that supports that asset, and they don't have to integrate with its native chain. They can just integrate once with a simple Bitcoin model.
So Eltron or something like that.
Right.
And you wouldn't even know if Eltron was created. Like, there's no way for anyone to know.
So I mean, the advantage of that is if its native chain has some kind of network disruption, you wouldn't even notice. Like what happens today is the individual exchanges will suspend deposits or withdrawals, and then they'll continue trading, and you'll get like a big price discrepancy because they're like small pockets of trading. So in this system, if the native chain has a problem, it doesn't affect the exchange ecosystem because you've got continuous liquidity between exchanges, even in the face of network disruption. So generally speaking, most coins are traded not, you know, they're traded based on the potential future or unspeculative value. And so they don't really need to use their main chains. They're only using their main chains, I'd say like 90% of the time or more, in order to move from one exchange to another or to move from a wallet to an exchange.
Yeah, it's a true off-chain
So Liquid
system.
supports both of those systems, right? So you could move assets between any Liquid exchanges within 2 minutes, and you can withdraw assets to your own cold wallet and actually transact assets peer-to-peer, like you could do an OTC trade with somebody else. Actually, we have a joint venture with Crypto Garage, a company in Japan, where they have regulatory approval to issue a Japanese yen stablecoin for the Japanese domestic market. And
fully backed, I imagine.
Yep. And Tokyo Tanshi, which is the other partner, is a 100-year-old bank, multi-bank and like interbank broker kind of organization. So it's a pretty prestigious participant for a Japanese yen stablecoin. And they're actually specializing on something called Settlement, which is an OTC service to allow Japanese exchanges and market makers to swap Japanese yen for liquid Bitcoin without custody of the OTC provider.
Right, you could just do it atomically.
Yeah. So and what you were saying about the atomic trade, it's not like the cross-chain atomic swap or cash locks and all that stuff. It's just that in Bitcoin, an individual transaction has multiple inputs and multiple outputs, and it enforces that they add up. Now in Liquid, there's an obvious extension because you can have different types of assets, and obviously the rule is that the number of bitcoins that go into it have to add up, and the number of tether or Japanese yen have to add up. And so I can actually say, okay, Jimmy, I'm selling you a Bitcoin for 7,000 or 8,000 or whatever it is. It's moving too fast today to keep track of. And here's a partly signed, like here's basically a limit order, right? I'm saying, if you pay a Bitcoin to this address, here's US dollars we're taking, and I can give that.
Oh, so you have a SIG hash that allows for that?
Yeah, so I mean, you can use established SIG hashes to do it because basically the transaction isn't complete because it doesn't balance, right? Like there's some tether US dollars in and some Bitcoin out, but there's no Bitcoin in.
You can use SIG hash single for that, or what do you use?
You have to talk with Nadav.
Okay.
He built it, but and the Japanese yen token, they have a version of it too, using the same tech. But basically,
so you could put a limit order sort of on a board or something, and you can have
actually
a real kind of.
So I mean, the settlement one is kind of more. It comes with a Japanese language integrated chat app for OTC traders. So that's more online. But in principle, you can sign a limit order, upload the limit order to the exchange, and walk away. And if the exchange gets hacked, you have to pay $8,000 for your Bitcoin. So it's not very interesting to steal them, right?
Yeah, that's true. Wow, that so it becomes a thing that you can take.
So I mean, if the exchange loses one of its functions, which they don't really want. I mean, as I said recently, the two main problems for exchanges are maintaining the security of hot wallets and maintaining banking relationships. So we can't do anything about the banking relationships problem. I think like exchanges will just have to buy or start banks. That's the only solution. But on these hot wallet security, they can just not have custody. And then basically what they're doing is the normal functions of price formation, limit order management, and
so I mean, you're essentially creating a bunch of quote unquote you could do stable coins for not just like assets from central banks, but you could do kind of stable coins for like Tron or whatever, Litecoin or whatever.
I mean, the simple way to do that,
fully backed.
Right. What we do with Bitcoin is it's algorithmically pegged. So there is, a HSM. So there's a group of servers that are operated by the exchanges that are 2/3 of them have to sign
hardware
blocks.
security module guys. That's what you said.
Yeah. So and those are looking at the validity of the blocks, and if somebody is making a signed transaction to take it out, they'll send it, but they will only actually send it to a cold wallet of a participating exchange for security reasons. Now, so we know that Bitcoin chain is pretty stable and dependable, so we're good with an automated peg. But for many altcoins, I think that might be a bit dangerous. So the alternative way to manage a peg is to have like a threshold multi-sig, where perhaps the foundation for the exchange and a couple of for the coin, a couple of big exchanges make a 3 or 5 signature or something like that, and they're responsible for managing the peg. And the peg doesn't have to be that fast or frequent because people can trade across exchanges immediately anyway, right? It's only if they want to like take it out and store it in cold storage.
Yeah. So you're separating the function of an exchange from being a security, like having to secure all that stuff, and pushing that towards the coin itself, where presumably they would know better how to secure things.
Well, right. I mean, if there's some disruption on its network or a fork or something, that's really between their users and their foundation and
their centralized
decision maker.
Their central bank, basically.
So obviously, exchanges don't want to take a position in that typically, so they need to resolve it. But at least you can continue trading with Liquid while that's happening is the point.
Yeah, so in other words, like Tron can set up a central bank on Liquid if they wanted to.
I mean, it's simplest with EOS because they already have this. Wait,
the Tron whose CTO accused them of being centralized, and now they're accusing him of embezzling money?
Yeah, I think that's Tron.
Right,
that's Tron,
right.
Not the movie.
So who do you believe?
I believe them both. I believe they're both equally shady in this.
Okay, I offer no opinions. I haven't read any of it, and I have no opinions. But
hey, on a bigger scale, so we were like chatting and disrupting the presentation during the Liquid thing, and the other thing that Jimmy, you briefly mentioned, I'm like, yeah, you're right. And but by taking your Bitcoin onto the liquid side chain, you're converting it to like liquid Bitcoin, and then you can convert it back. You can do faster transactions, you do small transactions.
You
But
get the
that's
privacy guarantee.
right, but that's an additional huge layer of fungibility if you just move it into liquid and then move it back.
Yeah, I mean, a lot of people have been doing that with Monero, right? And
Right.
I found out from Adam, like they took pretty much the entire open source code for range proofs and bullet proofs and imported it into
So
their
Monero
code base.
grabbed the liquid code base and
Well, I have a kind of accidental very remote connection to Monero, which is in 2013, I was working on optimizing the space efficiency of confidential transactions and the range proofs. And it uses like ring signature like tech. And so I happened to notice that the Monero ring signature was twice as big as it needed to be. So I just made a forum post to say, hey, you could like shrink this proof by this much. And like they didn't talk to me very much about it, but 6 months later they hard forked in my version. And so more recently, Greg Maxwell and Andrew Polstra and Peter Lower, this is a few years ago now, optimized and found some improvements for confidential transactions and implemented it. And Monero also later integrated there, and then we also did
bulletproofs.
So something that kind of came out of the confidential transactions range proof was bulletproofs, because we were like very interested to make it more space efficient. And we talked to Dan Bonet and gave, sometimes academics are interested to know what are the relevant questions, because they don't know, right? They're busy writing papers. But if you say, look, hey, this is a real problem.
That's how they get their grants.
If we could improve it, we would use it. And so they went away and said, well, maybe it sounds like an interesting problem. And then they came up with bulletproofs, which allow much smaller range proofs, like maybe about a third of the size or something, typical parameters, but are also a general way to implement zero knowledge proofs of Boolean circuits. So you can prove like in zero knowledge the pre-image of a hash function, all kinds of cool stuff, with much better security guarantees and simpler security assumptions than SNOCs. So you can depend on, there's no trapdoor, there's no moon math, at least to our perspective.
And no trusted setup.
No trusted setup. Yeah. It's not quite as small, but it's log scaling. So, the proof of a pre-image for SHA-256, which involves thousands of, tens of thousands of gates, is only 2 or 3 kilobytes. So it's pretty impressive.
That's pretty amazing. Yeah. I like just to summarize what I just said, I'll try to translate it for you. So he was involved in Monero's range proofs. So Monero for a long time they didn't have that much space per block, and you couldn't actually transact very often. In part because of these giant range proofs, and they're very big, right? Like
ring signatures.
Ring signatures, also range proof, right?
Yeah,
After they
added
turned
range proofs,
they added the range proofs at a certain point because they were doing the actual transfer a really peculiar way. But with after you have range proofs, now you have confidential transactions, which Monero adopted. But back then, the proofs like transactions end up just gigantic, like 10, 20K. Whereas on Bitcoin, they're like 400 bytes, right? Like, so it's like 10, 20 times as big. Whereas now with, the optimization that Adam did on the range proofs, that shrunk it a ton. And then, the bulletproof stuff from Stanford, Dan Bonet, that shrunk it even more. And they've taken all of this tech and, it's all in liquid now. So you can do all of this fungibility stuff. So what I was saying before the whole Monero thing is a lot of Bitcoiners, when they want like fungibility, they'll convert to Monero, do some transactions on Monero and bring it back to Bitcoin. Now you don't have to do that anymore without any of the exchange rate risk. You can just go to liquid, do a few transactions, completely private, get it back out.
The part that might appear as private is getting them out is you need an exchange account, and the exchanges want to know who you are.
Yeah.
But that's a trade-off. And there's also a couple of new services that are joining Liquid. One is SideShift, which is kind of Shapeshift-like service. And so they're going to allow immediate liquid Bitcoin to Bitcoin exchange, bidirectional exchange, and I think that's identityless.
I mean, you could also. I mean, is Lightning possible on?
Oh yeah.
On so in that case, you could do a cross-chain.
Yeah, I mean, you could swap. You could also do a cross-chain atomic swap, and you could do Lightning between them. It's much more plausible to do like liquid Bitcoin to Bitcoin Lightning because they're the one-to-one exchangeable.
Yeah,
right?
yeah, it's
the
very easy.
exchanges that have integrated so far have all done it on the basis of.
Jimmy's loud. There you go.
Sorry.
Okay, yeah. so the exchanges that have integrated Liquid have allowed you to basically deposit Bitcoin or liquid Bitcoin and immediately start trading and withdraw Bitcoin or liquid Bitcoin. So the way Bitfinex does it is you click on liquid Bitcoin, you get a liquid address, and you send Bitcoin in, like from a liquid QT or from another exchange. That gets there in a couple of minutes, and then you click on the wallet, and there's a convert tool, so you convert liquid Bitcoin into Bitcoin. But there's just a user interface side effect, right? Basically, you deposit Bitcoin or liquid Bitcoin, and you can trade, and you withdraw Bitcoin or liquid Bitcoin. So they manage like the wallets behind the scenes.
Interesting. I do you think that might have had anything to do with the recent gap closing on the Bitfinex premium? Because it went from plus 300 to minus 200 and then back
I
to
think
zero.
that's the fact that they were able to get $1 billion in funding by selling the token.
Yeah, I think something else that might have been in the mix is with the price surge, you often see premiums actually on
But I mean,
retail
they're on
exchanges.
liquid though. So
Yeah,
I
they
mean,
are,
there may have been traders that were taking advantage of that and going between
I mean,
exchanges and
definitely
arbing really
people
quickly.
starting, and that would be much more effective once you have. I mean, we actually made use of it. I called up our CFO on a Saturday morning and said, "I have something for you to do," and he did some op trading in the opposite direction out of Bitfinex using it actually. But I think the point is that once because you can do Bitcoin quickly, but you still want to do US dollar quickly. So once Tether and some of the other US dollar coins, and we're working with other ones as well, are available, so then you'll be able to, not just move the Bitcoin in a couple of minutes, but be able to use the fiat in a couple of minutes. Across exchanges, I think the spreads will disappear.
So is Tether going to be migrating over onto Liquid?
Yeah, so Tether's multi-network already. So they're working on adding liquids.
Adam,
All right, Leah, go for it.
yes, I do want to hear your thoughts on finance and reorg, given the hack.
So that was pretty.
Your tweets were brilliant. I have to ask.
And my follow-up alongside that, everything is being blamed on a core contributor that suggested it.
Jeremy Rubin.
Yes.
Well, I mean, I think he kind of got too much flack probably, but and as Brian Bishop says, it's a reasonable question to ask, to explore all avenues,
especially as a fiduciary duty.
Right, and in fact, I hear indirectly that some of the previous hacks of other exchanges also asked, but they quickly realized that it's not practical for a whole range of reasons. So I think that the challenge is that, some of those previous discussions were not explained very widely. They were understood by a small group of people who described them and said, okay, we understand that's not really possible or practical. But this time, the positive side effects of all this kind of discussion and drama is now a lot more people understand the economic and technical game theory and even the geopolitical game theory of why this is not a good idea. I mean, actually, Peter Willer and Greg Maxwell wrote about a third of the game theory on Stack Exchange. So one of the interesting things is that it'll be very slow, because by the time you get your act together, I mean, I don't even this is possible because you have to develop code and it's
it has to be. I mean, that's what I said. Somebody said, why? Well, first of all, you need to have this ready to go. So basically, you get hacked, and you need to execute this within a block or two to incentivize the miners to immediately do it. And
all that accomplishes most of the time is you just punish the attacker.
Yeah,
right.
And even that may not work.
So there's a whole bunch of problems. So one problem is the point that Peter Will made that if is a coordination problem for miners. So let's say 12 hours have passed, you manage to reach 2/3 of miners, and now 1/3 of miners are mining against you. So your progress in redoing 12 hours of work will be at half speed. So it's going to take another 24 hours to undo it. So everybody's seeing this happening in complete slow motion train wreck, right? Including the hacker who has $40 million, probably 50 million, 60 million by today of stolen coins. And So what is he going to do with them? He's going to swap them out, right?
Yeah,
It's got 24 hours.
especially if Liquid is giving him quick atomic swap functionality.
I mean, he will swap them out. So there's like multiple variants of this game theory, right? So he will swap them out.
Which means that the exchanges will stop.
So I mean, if he swaps them out, he will say, "Hey, Tone, do you want to swap some Bitcoin for 10% discount?" Tone's like, "That sounds like a good idea. I'll take it."
Yeah.
And the point is that some of the people, there's maybe a blacklist. They try to communicate to say, "Don't do this." But if people don't want the reorg to happen, they may play act the part of the innocent victim, which like, I tried to do the blacklist, but I guess I screwed it up. So now I'm holding $10 million of these stolen Bitcoin, and please don't reorg, or if you're going to reorg, you've got to pay me $10 million because the attacker has traded into some other coin or something, right?
Or another Bitcoin.
Right. So now you have a different problem, which is a forensic accounting problem. Who's lying? Who, even if they did it on the sly, like you suspect that they're being sly about it and they kind of accidentally on purpose swapped it because they don't want the fork to happen, it doesn't mean you should steal from them and like undo their money, right? And the other problem is during this 24 hours, what's going to happen is everybody who wants to make an exchange deposit knows that they can redo their transaction, right? So let's say somebody puts like 1,000 Bitcoin in exchange, waits 6 blocks, converts into something else, takes it out. They wait about an hour and then they broadcast a massive RBF to undo and take their money back. Everybody's going to be doing this game during the next 24 hours.
Yeah, so exchanges, because they would know that game theory, they would just shut down.
Right, so now there's an additional cost, which is the entire Bitcoin exchange, the entire Bitcoin industry has to shut down for 24 hours,
right?
Unless it's like friends payment, whereas like everything is unconfirmed for 24 hours. That's not a good idea, right?
Well, I mean, not only that, you have a huge backlog of transactions for a whole day that you have to now go and mine.
Right, okay,
afterwards.
so there's another one I wasn't even.
I'm sorry to interrupt.
I can't interrupt.
Please.
We're on live stream. So the point is right, I think you raised another point, which is now there's a backlog, right?
Yeah.
So there's
the fees go up,
like 18 hours of transactions that have to fit into 12 or something like that. And so people will be playing games to reorg exchanges. So now the exchanges and the entire Bitcoin ecosystem has to shut down. And like, think about the cost. If you work on Wall Street, which I didn't, but Tom did, and probably you did as well, Lee. So people who work in the IT part of that get a malus. If there's like 15 minutes of downtime, they'll get 10% of their pay docs. If there's 30 minutes of downtime, they get 20% of the pay doc. Downtime on stock exchanges is like ridiculously expensive. So think about 24 hours of outage for the entire Bitcoin ecosystem. Binance lost 40 million. I think the Bitcoin ecosystem would lose $1 billion for that, right? So that's not going to happen. Like, it would be just far cheaper if you went to all the exchanges and said, you've got 2 choices. You shut down the network for 24 hours, or you chip in and you bail us out. It'd be cheaper to bail them out. It'd be literally tens to hundreds of times cheaper to bail them out. So that's a purely economic reason why it doesn't make economic sense, right?
Right.
Just quick,
go ahead.
go for it, Tom.
Go.
What do you think people misunderstand the most about power of the miners?
Well, I think they, I mean, it became most clear with the unrelated event, which was the different forks that happened over the last year or so, where I think some people genuinely thought that the miners were going to decide, and so they asked the miners to support their fork, and they didn't realize that miners would not be willing to lose $1 million a day supporting something uneconomic. And a lot of people were saying, no, that doesn't make sense. And like, one way to understand it's not going to make sense is to buy some miners and think about it, right? So if you have miners and you have an electricity bill that's like $1,000 a month or $10,000 a month or $100,000 a month, and there are people with garages full of stuff and like people who do this as a sideline or as an investment to kind of protect their Bitcoin holdings maybe, then what they're going to do is they could say, well, if I want this coin and it's cheaper to mine another chain, I'm going to mine the other chain and then I'm going to use the coins I get for that and I'm going to buy the coin I want, right? So it doesn't make sense to mine at a loss, and actually they'll go bankrupt pretty quickly if they do, because the profit margin on Bitcoin mining varies over time. Obviously, it's a lot more profitable today than it was a couple of weeks ago or yesterday. But there was a period during the sort of sideways market movement that mining got more towards commodity, break even. Some people were switching off. And in that environment, the electricity bill might be 90% of the cost, right? So you can't afford to mine at a dead loss for very long because you'll go bankrupt. And so I think there's a misunderstanding that people thought that miners had free electricity or could afford to take ongoing losses. And the other point, which I think maybe Tone made at one point, is Bitcoin investors and holders are very intolerant of people messing with their money, and they can afford to wait for free. They can hold in a cold wallet all day long for months at a time, right? While a miner is going bankrupt. So if a user says, I don't approve, and they say it and mean it in a skin in the game way, they seriously propose to operate their businesses using the UASF fork, the miner basically has no choice. So it shows that actually, indirectly, it's the investors and holders that kind of control things, because there's an economic transmission across a few days, right? Which is they affect the price, and the miners have to follow the price or they go bankrupt. So, philosophical support is fine, like people have opinions. But when it comes to mining,
when the rubber hits the road.
yeah, when you're on the brink of bankruptcy and you're doing something irrational, you will become rational. And I've seen it firsthand. Like I spoke to a miner who was doing GPU mining of Ethereum at the time, and there was Ethereum Classic split, and I forget which way, but he was like very angry, and he liked one part and not the other. And so he was like, oh, I'm gonna do this, and like 3 days later, he'd actually swapped. He was mining the other one and then selling the coins and buying that. So I said, like, I won't name him, it was like a big GPU mining company. So I said, like, what happened, man? And he's like, well, I get more coins this way. So so he figured it out, right?
Yeah.
It's philosophical, and it became realistic when the market hit.
My other Jimmy, you gotta.
Yeah, I gotta go.
Jimmy,
but,
you gotta head out.
Thank you
But
for.
Adam, I got
your
one quick follow-up.
All right.
I don't want to keep you too long.
See you, Jimmy.
Maybe Leah still has a few minutes. But my other point on the mining front is, unlike other altcoins, like you said, the Bitcoin is rooted with old school holders. Companies are dependent on Bitcoin. And my point has always been, when it comes to Bitcoin mining, there is enough people that will do it at a loss because Bitcoin is so important to them.
Right.
And I don't see that in any other coin. All the other coins have to be profit driven, but not in Bitcoin. My business relies on Bitcoin's existence, and I'm happy to spend 10% of all my annual profits on an electric bill with never mining a coin, but helping to process transactions, helping with hash power.
Well, I mean,
because it still helps me. I don't see that in any other token.
Yeah, I mean, it's true. And like, there are questions about the long-term security and fees, when Bitcoin reaches kind of more full-scale adoption in like a few decades time, let's say, with a few more halvings, with full-scale adoption, presumably it will support a longer term, maybe more gold equivalent price, but with more halvings, the security subsidy could go down.
Mm-hmm.
And so I think there are, one direction where that could come in is, as you were saying, and I've heard one of the VC investors make the same observation, that it could be a cost of business, right? Yeah. If your business derives, its
$1 billion in annual revenue due to Bitcoin's existence.
So maybe you'll spend like $1 million or 10 million on mining because you need a decentralized network. An analogy I made actually is in the peering arrangements that operate the internet, right? So it has like transit, and people are moving all this bandwidth around, and there's some kind of tit for tat thing, and they like try to like loosely account for it. But basically, everybody needs the internet to work.
My viewers, you're paying an internet bill. The reason why your business pays an internet bill, and an internet bill for a business is way higher. I can only you probably say your internet bill at the Blockstream office is probably pretty high. You need a good bandwidth, you need good internet, and it's a cost of business. You're not mining internet coins.
Right.
It's a cost of business for you to do business, and I can see that in the future for Bitcoin mining.
So another idea that a few people proposed, and I thought of this, and then I saw somebody else hit on a similar idea, is that you generally don't want miners to mine backwards, and so it's generally a bad idea if a reorg happens for reasons we've discussed and some geopolitical reasons which we can get into in a bit. And so the one additional way, other than like the incentive of mining to do that, is to program the miner firmware or even the ASIC to not go backwards, right? To put a small bit like a fuse in there or a small bit of NVRAM. It knows the block height's increasing. The block height shouldn't decrease, right? You can have a reorg where you switch to something else, but it's always going to be going forward, right? So there's no, within the protocol, there's no valid reason for the block height to reduce. You know, you could see a orphan develop, but the orphan is longer by definition, or you wouldn't switch to it, right? And so you could see increasing hardening and integration of no going backwards into the hardware at lower and lower levels. And that would provide a different kind of investment protection against undos, which is, you know, if you had a expensive thing that you would like to undo because it's unfortunate, you still can't do it because the hardware won't do it. And there's like billions of dollars of hardware around. And the only way to force the issue is to replace the hardware, which is going to take like 6 months to manufacture lots of new ASICs and another $1 billion to do. So you could implement something like that so that, you know, even if the subsidy is lower, the equipment is acting as a ratchet to like force time to go forwards. So there's something else. And Luke Dasher, it turns out, has something a little bit like this implemented in BFG Miner.
Not surprised.
Which, yeah, I mean, there's so many interesting things that have been thought about by these, you know, very clever people who have thought about these problems. And Luke implemented the first driver for ASICs when they first came out. So there's an ARM board on it, and it's running some software, and he implemented it. So it's like partly mining the driver for the ASICs, like hardware handling, and partly like enough information, enough protocol knowledge to talk to a pool. And you typically put in 2 pools in case one goes offline and you don't want to stop mining. So if one fails, it'll switch, fail over, basically. And so he has additional logic that if one of them starts to go backwards, that's considered to be an anomaly, and it will switch to the other one. So if some mining pools started to have a run at undoing things, the equipment running this software would actually like switch, like something's going wrong, like switch, right? And you would hope, I mean, you could add logic so that if the second one starts to go backwards, you like stop and send a message to the owner or something like that, right? So there are definitely things that could and probably should be done over time to like improve the security of finality in Bitcoin. So the last point is about geopolitics. So in a sense that if hypothetically some people tried to do an undo, like so you saw it in Ethereum with the DAO, it calls into question, is this network actually final? When a transaction is final, is it final, or is there a policymaker who can decide to undo things? And some of the networks are intentionally policymakers. And there have even been papers proposing mutable blockchains, which kind of is the odd thing to do.
Also with that feature, the concept of a too big to fail exchange doesn't exist.
Right. I mean, so the problem is, I think, other than the economic mayhem that we were discussing, like that it effectively makes nothing confirmed for a day, like everything is unconfirmed. Right. And the fact that everybody will pile on and try to abuse it, who is inclined to do that. The other problem it has is it sets a policy precedent. So, okay, this policy is, it's unfortunate an exchange was hacked. But, there have been exchanges where we don't know whether the exchange was hacked or whether it was hacked, like air quotes, like it was an inside job. And so the next one might be one of those. Or even worse, it might be like, let's say the Silk Road coins start to move and the government says we don't want the Silk Road coins to move. Maybe there really was a second Dread Pirate Roberts, and now he's cashing in his $1 billion hoard hidden somewhere, right? And so now a government would say, well, you undid that, we want you to undo this. And now the people that took part in coordinating the undo are in an extremely awkward position. They have companies that are incorporated physical jurisdictions, they're known persons, and they have potentially a powerful legal system or government demanding they do something. So, if that happens, it's basically, I would say, a slippery slope, and it doesn't really, it's not Bitcoin anymore. It kind of shifts and pivots what Bitcoin is about from like cash finality to the existing financial world where people are allowed to do naked selling. And if they screw up and they miss the deadline, or it turns out they didn't have it and they thought they had it, then there's a review board at the end of the day that like figures out who takes the loss or what to do about it or what to undo. And that's really, a return to the status quo. And that's not a cryptocurrency, that's not an electronic cash system, that's not Bitcoin. So I would say that's an extremely inadvisable thing to do from the point of view of creating a precedent. And that's part of the reason that many people are against it. So, while some people say, oh, like, that's the way the protocol works. Well, I mean, firstly, it's not really, and there are all these game theory reasons that you don't, but also protocols improve, right? So my argument is, what do people understand Bitcoin to be about? Is it about cash finality, censorship resistance, and unseizability? And if that's the case, then our objective should be to improve, the fungibility, privacy, finality, and there are definitely technical things we know how to do today to improve that. And some of those problems become worse in the future, in the far future, where the subsidy is lower, for example, right? So there are definitely ongoing things that technology is evolving and improving. So I don't really accept the view that, well, like the current technology works like that. So, I mean, you could say, well, the current technology works like you can do RBF double spends. Does that mean you should go steal people's money? I don't think so, right? So like the fact that some technology does something or could be abused in some way isn't an argument to, remove the existing security constraints. It's an argument to improve security as technology allows.
So just a quick summary, and I just want to throw something in there, but going back to the potential reorg situation. So earlier I just said we can change to another Bitcoin. What I actually meant was, once Liquid is functioning,
Right.
you convert that to Liquid Bitcoin. How do you get that back?
Well,
You won't be able to, right?
Well,
With the reorg.
so Liquid tries to avoid reorgs quite hard, and the way that it does that is to move Bitcoins into Liquid requires 100 block maturity, which is almost 2/3 of a day, like 16 hours or so. And the reason we chose that number is because that's the same as the Coinbase maturity. Like when you mine a new coin, it takes that long before you can spend it. And also because historically, like there was a BIP 66 hard fork, which was actually a kind of reorg due to implementation defect. And
that's the 2013 one?
Yeah, and it involved like a fairly deep reorg where people realized they had been like mining on the wrong side for like maybe a dozen blocks or so they had to undo it. And we really don't want that to happen in Liquid. So we took a very conservative defensive step. So it may well be that a reorg like this is too shallow to get at those coins actually, right? In which case they would be final. So anything that is managing slow kind of movement into a layer 2 is not like it's not going to get undone basically. I mean, that's the secondary problem. So as more tech evolves, I think.
So basically, there's technologically you are very, very unlikely to do it, and economically you're even more unlikely to get this done. And it was funny, like around that time, I saw a Peter Todd tweet in a similar, like in a different way, but it applies all the same. When someone like asked Peter Todd, because he hates every single Bitcoin storage like security we have, and they're like, what is the best way to secure your Bitcoin? Did you see his tweet on that? His answer?
It was something like delete them or something, right?
Yeah, no, it was like kill all other humans.
Yeah.
And but then there was a little warning. Warning may significantly reduce the value and functionality of your Bitcoin, right? If you do that. So it's the same thing here. Like, yes, for the best course of action for Binance is to do the reorg and get their Bitcoin back. The problem is it may reduce the functionality and the use of Bitcoins because no one would trust the blockchain anymore.
Right. I mean, I would say that even in the midterm, for the exchange involved, it likely wouldn't make economic sense over a like quarter or something, right? Because it would affect confidence in Bitcoin, it would affect the growth in trade volume, and it would affect the credibility of the exchange as well for trying to force this through, it being unpopular action. And I mean the other thing is that people are trying to act in a period. It's kind of like the Bitcoin Genesis block, right? So I don't know if people know the full context of it, but a Chancellor of the Bank of England, Mervyn King, before this, like Chancellor on the brink of second bailout for banks, in the year before, he'd written like extremely long essays, impassioned essays in the Times of London, like full-page things, saying that moral hazard is a really bad thing. We really mustn't bail out banks. And he was like trapped in a corner where everybody was panicking. Like you gotta compromise your principles. Like it's gonna melt down, right? And so here we are in Bitcoin, which was built around cash finality to avoid moral hazard, and people are panicking that, oh no, an exchange is hacked, right? And like, I mean, firstly, this particular exchange hack is about 10 times smaller than the August 2016 Bitfinex hack of 120,000 coins in dollar value, right? And about 100 times less than the original Mt. Gox hack in February 2014. So, those previous events.
Oh, February 2014 was when they went down. The hack might have taken place in 2011.
Yeah. So that one was definitely. I mean, I think it's not entirely fair to talk about a reorg in the Mt. Gox case, because as more and more details came out from Wiz Security and stuff like that, it became clear that they were fractional for years.
Yeah, well, because he bought it with 80,000 missing Bitcoin.
Yeah.
So they were always like running a shady operation there.
So people thought that the hack can happen at one time, but it turned out there was like an ongoing series, and it was bought fractional, and so they tried to trade their way out of it in a rogue trade-like way. So anyway, I mean, it seems like other than the the scale of it being smaller than previous ones, the moral hazard equation is kind of ironic, right? And so people have, just as a kind of psychological phenomena, when they're in a panic mode, they're more likely to agree to inadvisable things, which they know as a matter of principle is a bad idea. Like take the Genesis block quote, Mervyn King, who was a Chancellor of the Bank of England at the time. And he was saying that philosophically, for like years, that quantitative easing and bailout of banks is just bad, right? It's going to encourage more banks to fail in another failures loop in the future. And yet everybody panics and prevailed on them to do it anyway. And so there's two modes of thinking, right? There's the brain is engaged thinking about the long term, and there's a panic mode thinking. And so there's another factor for reorgs, right? So if you want a reorg to work on a technical basis, you have to plan ahead. But when you're planning ahead, you're not panicking, and everybody agrees that reorgs are a bad idea. So it's almost impossible to get any kind of political support for building a framework and tool for emergency for exchange undos. And so it won't happen in the calm times, and in the panic times, there's way too little time to do it. It'd probably make things worse, right? Because you'd make an implementation error, or you wouldn't think about the game theory correctly, and then something else would fail. So, yeah.
All right, how you doing on time?
Gotta go in about 15.
Okay. Adam, how you doing on time?
I'm good.
You're good.
Yeah.
All right. Any other topics? Well, since we got Adam here, well, hey, the conference in Malta, that went great. We're definitely doing another one. And Magical Crypto, you guys were both there. How was that?
I mean, it was pretty good. It wasn't as, I think one of the rules we had in Malta is if you can't make a live demo, it didn't happen. And we didn't want people presenting slideshows about things, PowerPoints about things they might be able to implement in the future, or faking it, right? So you had to do a live demo or it didn't happen. And Magical Crypto didn't hold to that standard, unfortunately.
So as you guys know, that I moderated the mining panel, which was really interesting. And that's why I'm also asking Adam these questions right now. And when I started off the panel, I said that maybe Adam will come up as an illusionist act from the movie. So Adam was potentially going to come up, but now I finally got my answer. So thank you.
I lost track of time, so I was busy talking to somebody else, and I didn't realize I could come on at the time.
All right, so
Adam's panel was the same time.
So Adam, so what's the latest on Blockstream's Lightning implementation? How's that going along?
Pretty good. So Lisa Nygaard gave a presentation. YouTube should be online on the first day of Magical Crypto. She's one of our senior developers working on Lightning. We have 3 developers working on the core protocol. And so she kind of gave an update on like what's being worked on at the moment. But basically there's kind of second iteration of Lightning with multipath channels, dual funding channels. So she's working on a bit for the dual funded channel thing. And there's a roadmap of features and protocol improvements that there was a physical meeting in Australia a few months ago where many of the Lightning developers from different countries came and spent a few days discussing the trade-offs and figuring out what was the priority from their perspective to implement. So
what was the conclusion of that? What was the
it was
priority?
like a massive list of small, medium, and large features, basically. But multipath channels, splice in and splice out is another big one because it allows you to interoperate between on-chain Bitcoin and Lightning Bitcoin more easily. So particularly, it's more plausible to put the entire balance of a smartphone wallet into Lightning because you're able to take funds from a Lightning channel and pay a non-Lightning user. So the way that works is you ask it's a multi-sig between you and the guy on the other end of the channel. And so if I want to pay you and you're not a Lightning user, you give me your Bitcoin address. I'll ask the person on the other end of the channel to take some funds off the channel, co-sign it, and send it to you, and recognize the channel balance reduction and keep operating continuously while this is happening, right? So they know how to do this. They didn't implement it in the first place because they had to get things started first, right? And there's an opposite version of that, which is a splice in, which we have an existing channel and we want to accept a payment from somebody who doesn't know about Lightning. So we give them an address which tops up the channel balance in favor of one end of the channel. And then they increase your channel balance in a way that the channel's aware of, and it increases your balance. So that's so both of those things are actually pretty nice for giving the technical mechanism to greatly improve the user interface of it, because you can pretty much interoperate. Something else, which is not really part of the spec, but John Cavallo, Bitcoin Erlog Online, who works for Bitrefill, presented at the Malta conference something called a turbo channel, and that's kind of like reckless squared. So basically the idea there is they really want like fast and convenient Lightning use, and for many people that's like an additional risk is good as long as the usability is there. So what they do is they accept unconfirmed capacity in Lightning as a balance you can spend, and assuming that the person topping up the channel won't try and double spend their own channel establishment. So it's kind of like taking an unconfirmed payment on Bitcoin, but now you're taking an unconfirmed payment from a channel which might disappear if they cheat you. And the beauty of it is though that you can, because when you set up a Lightning channel, you have to wait for the deposit to confirm, and then you can start doing things, right? So this allows you to just do a few clicks and start doing stuff, right? And there's another one which is, people are doing other things. So Alex Bosworth is doing something with ways to increase capacity or swap capacity for on-chain for Lightning capacity and things like that. So, and there's like a lot of, so there's kind of protocol level stuff, and there's also Schnorr signatures and Taproot, which will have benefits for Lightning because all Lightning channel establishments are 2 of 2 signatures and some if clause about how to close a channel in different conditions. And so with Taproot, so firstly with Schnorr signatures, a 2 of 2 signature becomes half the size. That makes channels set up smaller, and you can do twice as many of them. Well, not twice as many, but you can pack more of them in a block. And secondly, the if branch is hidden unless you use it. So it means that if you look in a block explorer at different transactions that are happening on the main chain, you can no longer tell which ones belong to channels. They all look like single signatures, basically. And this sort of applies to the green address wallet, Blockstream Green. it also has like one of these type of transactions for a different use case. So it's multi-signature, two-factor authentication, or like an alternative clause if you lose your two-factor authentication device, that you can get single access to your funds after a time delay. And so that time delay can also be a hidden if clause, and a 2 of 2 signature can be a single signature, Schnorr signature. And so that means that you get rid of a lot of fingerprinting, so you get better fungibility from that perspective. Like a green address, 2 of 2 transaction, a single signature wallet, and a Lightning wallet all look the same. So it helps kind of reduce fingerprinting, it improves capacity because you get single signatures and less of the, so, you know, every time you spend one of these transactions, a full script is revealed to the blockchain and it takes space. So the default transaction becomes smaller, so you get more transactions per block as well. So it's good for capacity as well.
All right, you have a follow-up or?
I definitely need to process that more. No, I guess, so I think you guys are also helping people set up the green wallet here today, right? Yeah.
Cool.
So I'll learn more about it.
Just a
That was
quick thing,
interesting.
because I was at the Lightning Talks earlier this morning, upstairs, all the way upstairs, and then they had a panel, and Jonathan Mohan was moderating. He asked a really good question to everybody on the panel, and it was Pierre Richard, Jameson Lopp, Christian Decker, John Cavallo. And he said, what do you think is the biggest misconception or misunderstanding about Lightning?
I mean, I think it's sometimes people who are working on the tech get too close to the tech and they don't understand what's not intuitive to people who are kind of more casual users or power users without being technical experts. And so I think there was quite a bit of confusion as to whether, like, because, you know, it feels like you're putting Bitcoin into something else and then you're using it in something else. So it feels like, you know, not quite a Bitcoin or an encumbered Bitcoin. But I think it's better to think of it as just Bitcoin that moves faster and is more scalable because it doesn't have to send everything to a chain. And the splice in and the splice out really makes the case, because it's saying, like, you know, it's just like an upgrade for Bitcoin, because you can still send between a Bitcoin wallet and a Lightning wallet, and you can still sell between a Lightning wallet and a Bitcoin wallet, and you can send even faster and cheaper between a Lightning wallet and a Lightning wallet. So it's just a protocol upgrade in a way, right? And so, you know, people are thinking about it in user interface terms like, oh, how will I see in the user interface that I got like a Bitcoin balance and a Lightning balance and I'll have to rebalance it? And like, no, like that's all going to go away, right? You're going to have a smartphone wallet and it's going to have Bitcoin in it and it's going to be faster and cheaper and it will be backwards and forwards compatible. And that's it, right?
All right, Adam, that was great. I think people are begging me to take a look at the price action. If you're curious, stick around for a few minutes. I'll do a screen share. I'm curious about the price myself. I heard it was popping this morning, Leah.
By the way, all of the videos from Malta are up right now, guys.
Yes.
So you can see everything.
Understanding Bitcoin YouTube channel. Adam, thank you so much. Always a pleasure, and I'll see you the
Thanks,
rest of the
Adam.
week. All right. I know we have a second mic. Here, grab that one.
All right.
Perfect. Okay.
Now I get to ask questions I understand. Just kidding.
All
That was really fun.
right. Let's
That's
let me go to
awesome.
screen share. Let's see what's up with the price. I haven't looked at it at all. I think it's on this tab. Yep, there we go. Oh wow, my battery's almost dead. I am at 24%. Let's see what we can do. Oh, we got shit coins. Literally. It's what we're looking at here. There you go. There you go. We're at consensus. Oh, I was already, but it was in a corner. It was in a little corner, unfortunately.
That's probably a good idea.
Yeah. Real quick. Stop share. There we go. Let's do it one more time.
Oh boy.
There you go. There's consensus. There you go. We have shit coins literally walking around again. Last time, what was it last time? You weren't
It
here.
was like green
It was
coin, and they didn't
it was
even-
like token. It was like the token.
Green
token. Yeah, it was green token.
And she didn't even remember what token she was. For everybody asking, yes, we are in the basement.
Yes, we're in the basement. This is so they put all of like the actual Bitcoin talks either on a fourth floor that no one knows exists, or in the basement where nobody knows exists.
Oh, we couldn't find it.
Yeah. All right.
Oh, that's
Price of
cool.
Bitcoin. Yeah, it's the new New backdrop there. That's when I was speaking next to Wozniak. That was
Yeah, it was.
Was.
That's really cool.
All right. Let's price of Bitcoin. That's where we are. Okay. This is the
I'll watch
weekly
Snapchat.
price of Bitcoin, and we are going up. We are now at 78.72. Let's see what that means. Now, oh, a new week started. So we are number 6 of 9 sequential. So we continue to go up. So this goes to what I said yesterday. Let me go to a lower level time frame where I drew in some lines, okay? So those are my lines yesterday, right? I drew in my line around 7,500, and I said, if we break this line, get ready for a pop. Now, a lot of people are gonna say, well, I should have bought here and profited on that. But buying there, you can always go back down and end up in a bad trade. The good trade was to buy it near the yearly high, because once it pops, it goes up quickly. Looks like it went, what was the high of the day? Looks like it was 7,800, like $25. No, wait, 8,000, $25 off of 8,000. 7,977 was the high. Just dropped down a little bit. And now that we're above this line, we need to establish a new high. On a daily scale, we are at 4 of 9 sequential. So I would love to see, 5 more days of upside. You want it to be as high as it can be. Then you want to see a reversal candle. Then you want to try and, take the short trade on that. Though that might be dangerous, I would just be looking to sell some Bitcoin. And I certainly don't regret selling Bitcoin this weekend at a lower price, and I'm happy to sell Bitcoin at the next level of resistance. The next level of resistance is between these two lines. It is between the weekly setup trend line and the 38% Fibonacci line. The weekly setup trend line is coming in at 89.50, and the Fibonacci line is coming in at 94.40. So somewhere in this area is the next level of resistance. Now, once again, the sequential is telling you to wait this week, potentially 3 more weeks, but you don't know how fast it's going to rise or how slow it's going to rise. Oh, we are now down to 19% on battery life. So this is pretty much it. Stock market. How's the stock market doing?
4 hour. Try that.
The 4 hour.
No, that was the 4
Oh, that
hour.
was the 4 hour. Okay, yeah. So here's the 1 hour. The 1 hour is on a 9, and there's the top. Well, those that paid attention to the sequential could have been able to get the high of the swing today right at 8,000, right on a 9 sequential. We are now pulling back. You can also see where my blue line is on an hourly chart. It was at 74.50. So buying at 74.50, the breakout wasn't a perfect breakout. A green 2 going above a green 1 would have been the perfect breakout. Breakout nonetheless. There's your top on an hourly 9. Look for a 1 to 4 candle pullback, and then potentially more upside. If the pullback continues, it can probably go down back to the breakout area of 7,500, and then you can look for a bounce from there. Okay, but no one could have known which direction it was going to break out. My money would have been on the short side, but I also have stop losses to make sure that my losing trades are small and my winning trades are much bigger. And the winning trade here was buying the breakout tops on an hourly 9. Not surprising for me, but that's because I believe in sequential. S&P.
Crazy.
Whoa. S&P is taking a bit of a nosedive on the hourly chart. The daily chart. You do have support right here. And if you break the setup trend line, creates more probability of downside. It's the weekly chart that we have to watch. As long as we stay above the blue line, we are still in a clean uptrend. I guess I've been saying all year, I did not expect us to break 3,000 this year. I expected us to break 3,000 next year, but I also expect this low to hold this year as well. So I'm expecting a bit of a neutral year as it goes into the 2020 election. And then we'll see what happens to our lift. Oh, I got to see a lift. There it is. Lyft is setting up beautifully for a potential buying opportunity in the $35 price range. Those that properly have navigated the Lyft IPO have still not done anything other than potentially shorted at key points here and there. Those were the key shorting points. Never really a good buying opportunity, and I clearly stated that the whole time. Uber will probably present a buying opportunity as well. We have absolutely no TA on Uber. 2 candles do not make TA. That's about it for me. The battery's about to die anyway.
They're red.
Down to 16%, unless there's a good question.
I have not gotten a question.
Excellent. How many people were watching us live, I wonder? 1,300 viewers. Hey, guys. So thank you for hanging out with us, Jimmy Sung, as we interviewed Adam Back. Adam is absolutely great. Top 5 smartest people in crypto space, and you definitely want to pay attention to anything he says. All right, guys. Leah, we're sending you off to Washington.
Yep.
You are not
Heading back.
You're not gonna stick around and party with the shitcoins.
Not.
And you hadn't, but you were around for Magical Crypto.
It was a lot of fun. All right.
Bye.
Bye, everybody. Come on.
Yes. I always forget to stop.